to start on chapter 2. We'll see how far we go. This chapter talks about a type of processing called job order costing. We have job order costing and then we have process costing that we'll talk about in chapter 3. So we're going to talk about specifically why would we use this type of costing and how do the costs flow in this scenario. And we're going to get into how we apply our manufacturing overhead to our products and understand the application of what's called underapplied or overapplied manufacturing overhead. So this is really going to get into the nuts and bolts of managerial accounting. So as you see here, cost accounting or managerial accounting involves measuring, recording, and reporting product costs. We take these various accounts that we've discussed, our work in process accounts, our finished goods accounts, our raw material accounts, and all of these accounts are part of our chart of accounts. They're in the general ledger. And I'm sure you've heard through financial accounting that when we use what's called a perpetual inventory system, it's computerized, so we always know at any point in time, if we can trust the software system, where we stand as far as where our products are and how much we have available. The two systems, we're going to talk about job order system in this chapter, and then we'll also talk about a process order cost system. They're used based on different types of products, and we'll talk about that. So process cost system is used when we have a large volume of similar products such as petroleum, cereal, ice cream, milk, where one unit isn't going to be very different from another unit. Costs are accumulated for a period and then they get assigned to departments or processes. So in example, to use this process system, when we're dealing with vegetables, you harvest them, you clean them, you slice them, you fry them, you bag them. One bag is going to be identical to the next bag, okay? It should be. The two basic types of cost accounting systems are A, job order and job accumulation, B, job order and process cost, C, process cost and batch, D, job order and batch. What? B? Perfect. A process cost system would most likely be used by a company that A, makes motion pictures, B, repairs automobiles, C, breakfast cereal, D, college graduation announcements. C. So this job order system means we assign costs to each job or each batch. This is what we would use in automobiles, wouldn't we? Or homes. Each job or batch has its own distinguishing characteristics. Objective is to compute the cost per job. So this method measures cost for each job completed. So as you see here, this system shows how we account for costs related to a Disney film. So we've got film job 9501 and job 9502. Each one is going to have unique cost associated to it. So it wouldn't be fair to lump them together and split them, because as you see over here in Job 9502, they have actors, they have stunt people, they have set design, food caterers, stunt insurance, location fees. Totally unique from Job 9501, which mainly has music. It's more of an animation and a music component. So the costs are so unique that we want to be specific and assign the cost to that particular job. Okay, the flow of cost parallel the physical flow of the materials as they get converted to finished goods when we're dealing with a job ordering system. Manufacturing costs get assigned to WIP. Cost of completed jobs are transferred to finished goods. And then when we sell that job, we transfer it to cost of goods sold. Okay? So as you see here, in purchasing a fire truck, or building a fire truck, we have raw materials, we have factory labor, and we have manufacturing overhead. As we're producing this fire truck, the goods and the cost are going to go into work in process. Once we finish this fire truck, we're going to take it out of work in process and we're going to put it into finished goods. Okay? When we sell it, it's no longer a part of finished goods. It's going into cost of goods sold, which will then show up on the income statement. Okay? The work in process and finished goods are part of the balance sheet. Until we sell it, it stays on the balance sheet. Once we sell it, the cost of goods is technically like an expense account. Here's an example. Wallace Company purchases 2,000 lithium batteries at $5 per unit and 800 electronic modules at $40 per unit for a total cost of $42,000. So this is just purchasing raw materials. That's all we're doing. We're going out and we know we want to manufacture something, but we've got to bring in the raw materials before we begin to manufacture them. So the journal entry to record this purchase would be raw materials inventory for $42,000 as a debit because we're increasing an asset, which is inventory, and we credit our liability, accounts payable, for $42,000. Then we have factory labor costs. We have the earnings of the factory workers, the employer payroll taxes on these earnings, and the fringe benefits. So Wallace incurs $32,000 of factory labor costs. Of that amount, $27,000 relate to wages payable and $5,000 relate to payroll taxes payable in February. The way we're going to record this, factory labor, $32,000, factory wages payable, $27,000, employer payroll taxes payable, $5,000. So the $27,000 is the amount we're going to ultimately pay the employees. That's the net check. The employer payroll taxes are the amounts we are obligated to pay to the various government entities. Now we have manufacturing overhead costs. We have property taxes, depreciation, insurance, repairs, costs unrelated to the manufacturing process that get expensed. Costs related to manufacturing process are accumulated into the manufacturing overhead account. Now remember, costs unrelated to manufacturing process get expensed. What kind of cost are we talking about here?
These are sales and administration costs.
period costs. Exactly. If they're getting expensed, these are period costs, not product costs. Okay? So here we have, using assumed data, the summary entry for the manufacturing overhead in Wallace Manufacturing Company is going to be a debit to this inventory account called manufacturing overhead of $13,800. We credit a utilities payable of $4,800. We had some prepaid insurance we've used up, so that's why we're crediting our asset prepaid insurance, because it's going over to manufacturing overhead. We have a bill for repairs. We have some depreciation that is being lumped into this manufacturing overhead. And we have property taxes payable. So all of these that are directly related to the manufacturing of goods but aren't specifically directly identified to products are going to get lumped into this manufacturing overhead account. So now we're going to do this one on our own. During the month, KRT Company incurs the following manufacturing costs. Raw material purchases of $4,200 on account. When it says on account, that means we didn't pay cash for it yet. We have a bill. Factory labor of $18,000. Of that amount, $15,000 relates to wages payable and $3,000 relate to payroll taxes. Factory utilities of $2,200 are payable. Prepaid factory insurance of $1,800 has expired, and depreciation on the factory building is $3,500. We have to prepare journal entries for these amounts. So the journal entry for raw materials is going to be a debit to what? Raw materials, and a credit to accounts payable because we purchased them on account. The factory labor of $18,000 is going to be a debit to our inventory account, factory labor of $18,000. The credit would be factory wages payable of $15,000 and employer payroll taxes payable of $3,000. Now we have to create a journal entry for our manufacturing overhead. Factory utilities of $2,200 are payable. Prepaid factory insurance of $1,800 has expired. Depreciation on the factory building is $3,500. Again, we put the lump sum into manufacturing overhead, and our credits are utilities payable of $2,200. Since we're reducing our prepaid insurance because we've used it up, we credit it. Does that make sense why? And then our accumulated depreciation is a credit of $3,500. Assigning manufacturing costs to work in process results in the following entries. We normally debit. To increase an asset, we debit it. So debits made to work in process inventory increases our work in process inventory. When we use some of our raw materials inventory, our factory labor or our manufacturing overhead, we're going to credit those inventory accounts to reduce them, so we put them into our work in process inventory account. We often use to request products, we use a job cost sheet. We record the cost chargeable to specific jobs. Each entry to work in process inventory must be accompanied by a corresponding posting to one or more job cost sheets. In financial accounting, you learn that you need to have documentation for every journal entry you record. you have to have a source document. In managerial accounting, the source documents will show how much was requested from raw materials and transferred over to work in process. So you still need a source document, but those source documents are going to be job cost sheets, okay? The job cost sheet basically will show here the job number that we need to assign it to, the quantity, when it was requested, the item we're requesting, for what, and specifically link it to a specific job. Raw materials get assigned to a job when the materials are issued in response to a job order request. In this particular case, when we're requesting materials, we will have a material requisition slip. Someone's got to authorize those materials, and generally speaking, we're going to put those, if they're direct materials directly related to a product, we're going to put those, debit them to work in process. If they're indirect materials we're requesting, they're going to go over into manufacturing overhead. Does that make sense? So the material requisition slip requests what we want, the job number, and what we need. So in this case, we're requesting 200 lithium batteries for a total of $1,000 of costs. So Wallace uses 24,000 of direct materials and 6,000 of indirect materials in January. So the entry to record these will be the 24,000, because we're working on it, is a work in process of a debit of 24. The 6,000 of indirect materials goes directly into manufacturing overhead. Then what we do is we credit the raw materials inventory. Think about it. We had 42,000 sitting in raw materials. Since we've now requested 30,000, we no longer have raw materials of 42. We only have raw materials now of 12,000, right? Because this 30,000 has been split into 24,000 work in process or WIP and 6 into manufacturing overhead. We're assigning them to another inventory. The sum of the direct material columns of the job cost sheets should equal the direct materials debited to work in process inventory account. So as you see, our WIP account shows 24,000. We can clearly show the 12 for this job, plus the 7 for this job, plus the 5 for this job, come up with our 24,000 WIP. Okay? The factory labor costs are going to be assigned specifically to jobs based on time tickets, and the time tickets are going to show how much they've worked, the employee, and the accounts they get charged to. So as you see here, this employee who is working on a job, number 101, his hours, 4 hours of this are going to get charged to job 101. Okay? The time tickets are later then sent to payroll, which applies the employee's hourly wage rate and computes the total labor cost. If the 32,000 total factory labor consists of 28,000 of direct labor and 4,000 of indirect labor, then we're going to show work in process of 28, manufacturing overhead since it's indirect. You see how this manufacturing overhead can get big, fast? And then factory labor, that inventory asset is going to be reduced because we're now assigning it to a specific job. So as you see, the factory labor was debited at $32,000. Now that we know where that labor was assigned to, we credit that factory labor and we assign 28 of it to work in process and 4 of it to manufacturing overhead. Now, what kind of employee would be assigned to manufacturing overhead? The janitor or supervisor, that's supervising a lot, okay? But the labor that is directly linked to work in process would be those specifically working on that product. Now, we have all these factory labor costs. The sum of the direct labor and the direct materials are going to go right into our work in process. What they're showing you here is if you take each of the job cost sheets, each of these cost sheets should ultimately all go into our work in process. So as you see here, on January 31st, we had $24,000 of work in process for materials. I believe it was materials. And then we have $28,000 of direct labor getting assigned to specific jobs. 15, the 9, and the 4 are getting, the labor is going right into work in process. So, we have Danielle Company working on 2 job orders. The job cost sheets show direct materials on job 120 for $6,000, job 121 for $3,600. Direct labor, job 120 is $4,000, job 121 is $2,000. And we've got our manufacturing overhead. Job 120 is $5,000, job 121 is $2,500. We have to prepare journal entries to record the assignment of the cost to work in process from these job cost sheets. So, as you see here, we're going to take our work in process inventory, 9,600, the 6 and the 36, and we're going to credit raw materials because we're taking it out of our raw materials inventory because we've requested it because we're using those goods now in a product. So we debit our work in process, we credit our materials. The same we're going to do with labor. We're going to debit it into WIP, and we're going to credit the factory labor. Then our manufacturing overhead is also going into WIP, and we're going to credit that manufacturing overhead account because now we know that specific amount is getting applied to work in process. Everything has to flow through work in process as we're working on it, okay? Manufacturing overhead costs relate to production operations as a whole. We know we can't assign them to specific jobs because they're too minuscule. So because we can't assign them to specific jobs, companies have a way they calculate by estimating how much of this manufacturing overhead needs to be applied to specific jobs. Companies assign to work in process and to specific jobs on an estimated basis through the use of what we're going to call predetermined overhead rates. Remember, the manufacturing overhead has a lot of stuff in it. How do we take all of these minuscule numbers that add up to be big and assign them to jobs? Well, through experience, they calculate predetermined overhead rates per job. Oftentimes, they have come up with a relationship of the overhead costs related to what they're producing. Oftentimes, they calculate predetermined overhead rates based on either direct labor costs or direct labor hours or direct machine hours. They're going to create a relationship based on what would be most obvious for the goods that are being produced. Okay? So, the way we're going to calculate a predetermined overhead is based on the previous year's estimation of how costs actually played out. We're going to come up with a predetermined overhead at the beginning of the year. Then from there, we're going to estimate our factory overhead that we're going to apply to each product line. So what happens is manufacturing overhead costs get assigned to WIP during the period so we can get some information to give back to the managers. We have come up with either direct labor, direct materials, or some type of machine hours. So we've got some actual figures times whatever this predetermined rate is that they tell us to then be able to assign this manufacturing overhead to specific jobs. So here's an example for you. Wallace Company uses direct labor costs as the activity base. So direct labor costs are the actual, the barometer or the mechanism we're going to use to take our predetermined overhead rate. So the direct labor costs are the activity base. Assuming the company expects annual overhead costs to be $280,000 and direct labor costs to be $350,000, we have to compute the overhead rate. So this is helping you learn how we come up with a predetermined overhead rate. We take our $280,000 of estimated overhead costs. We take what we estimate our direct labor costs to be. Then we figure out what the predetermined overhead rate is going to be. So when every dollar we spend in labor, we'll assign 80 cents of manufacturing overhead to that job. Does that make sense? So in this example, Wallace applies manufacturing overhead to work in process when it assigns direct labor costs because the two are linked. Calculate the amount of applied overhead assuming direct labor costs were $28,000. What are we going to use? 80 cents on the dollar. So $22,400 will be applied to manufacturing, of the manufacturing overhead will go into work in process. So we'll show WIP, $22,400, and we'll credit our manufacturing overhead, $22,400. So as you see here, we are coming up with this predetermined overhead rate. And it's the best we know because we don't have to get this information accurate is going to take too long. We want to provide the managers with timely information. So that's why we're estimating this cost. So you can see that the sum of the manufacturing overhead columns of the job cost sheets should equal the manufacturing overhead we applied to WIP. So you see here, we've got the $12,000 here, manufacturing overhead, the $7,200 here, the $3,200 here, the 12, that's $19,200, $22,400 is going into WIP. We're debiting WIP for that piece. We're crediting our manufacturing overhead for those pieces. So as you see here, the balance in the work in process inventory should equal all the job sheet costs. So we've got a way in which we know how to balance it. The costs for jobs 101, 102, and 103 that we're working on, those 74,400 should all be a part of WIP, work in process. So let's take a moment here and look at a problem. Example 2.4. Let's go to 2.4. What page is that, guys? 78, thank you. Okay, so 2.4. I want you to spend a couple minutes here and try to come up with A, B, and C. Okay, so with exercise 2.4, if we know the the total manufacturing cost are $145,650, we know that total manufacturing costs equal direct materials plus direct labor plus manufacturing overhead. So A plus 50,000 plus 42.5 equal our $145,650. So A equals 53,150. For B, our total cost of work in process of 2015 equals our total manufacturing cost of 145,650 plus B. So we know B has to equal 55,850, right? Then C, if our total cost of work in process minus our work in process as of the end of the period has to equal, or minus that equals our cost of goods manufactured. So 2015 minus C equals 192.3. C equals 9,200. You guys following me okay? Okay, now let's look at case B. Direct materials, direct labor, manufacturing overhead applied equals our total manufacturing cost. So basically, they want our case A.
You have to look at the direct labor to manufacturing overhead in case A and find that percentage, which is 85%. And then
Perfect. So that's how we're going to calculate it. So let's see here. Indicate the missing amount. Assume that in all cases manufacturing overhead is applied on the basis of direct labor cost and the rate is the same. Perfect. So if in this scenario our manufacturing overhead is $42,500 to our direct labor of $50,000, what would our amount per labor hour be in manufacturing overhead? What would it be? 85. So in this case, if we have to take 140,000 of hours times 85 cents, what would D be? 119. So E is going to be a summation of the 83,000 plus the 140 plus the 119, which equals 342. 342, the total manufacturing cost, plus our work in process of 15.5 equal F, which would be 357.5. Make sense? 357.5 minus our work in process as of the end of the year will equal our cost of goods manufactured, which is 345.7. Now they're making it a little more interesting in case C. We know our total manufacturing overhead of 213. We know our direct materials used of 63,150. So we basically have to create two variables. One where we need to figure out our direct labor, and then we're going to have to figure out our direct labor times 85 cents, right? But we know it's 213,000. So what I'm going to do here is, in this scenario, darn it. So, how are we going to calculate this? We know that the equation is going to be 63,150 plus what? Plus H, right? Plus 0.85 of H, right? Equals what? 213, right? So we can have 1.85 of H equals 213 minus the 63,160, or 149,850, right? And then if we divide both sides by 1.85, H then equals the 149,850 divided by 1.85, or what? What does H equal? 81,000. So if H equals 81,000, that means our direct labor is 81,000. Our manufacturing overhead would be 81,000 times 85 cents, right? Or 68,850, right? Yes, no? Is that making sense? So our 63,150 plus our 81 plus our 68,850, all of that should total our 213,000 that we have right here. That's about as tricky as it gets. Okay? Now, our work in process is 18. So our total cost of work in process is the 213 plus the 18, or 231. And our work in process as of the end of the year has to be the 231 minus K, gives us our 222. Or the end of the year work in process has to be 9,000. Is that a little confusing for you guys? Should we do another one? I think that's the only one like that. Which other problems were we going to do? I think we're going to do 2,
5, and 2.
okay, 2, 5. Let's go back to the PowerPoint before we start on 2, 5, though. So let's look at this, how we calculate the predetermined overhead rates again. Okay? Stanley Company produces specialized safety devices. For the year, manufacturing overhead costs are expected to be $160,000. Expected machine usage is $40,000. The company assigns overhead on machine hours. Job number 302 used 2,000 machine hours. Compute the predetermined overhead rate. So if the machine usage is estimated to be 40,000 hours, and our manufacturing overhead is expected to be 160, we're going to take our 160 divided by 40,000 hours, which means we calculate $4 of manufacturing overhead per machine hour. If our machine hour is 2,000 hours times $4, then we're going to apply estimated or predetermined manufacturing overhead of 8,000, aren't we, to that job? Stanley, okay, so then they want us to create the journal entry. To apply the manufacturing overhead, we're going to debit our WIP, and we're going to credit or reduce our manufacturing overhead by that 8,000. Now, our job is to assign all these costs to the finished goods. So while a job is being worked on, it's in work in process. When the job is done, we're going to take this out of work in process and we're going to put it into finished goods. So when the job gets completed, Wallace is going to summarize the costs, and as you see here, they complete this bottom piece of showing the direct materials, direct labor, the manufacturing overhead, and then based on that, and based on the number of units they produced, we can assign a cost per unit. And you see here, $39 per unit. Assigning costs to finished goods. When a job is completed, Wallace makes an entry to transfer its total cost to finished goods inventory. So the $39.9 increases the inventory account finished goods, and we're going to decrease our WIP account because it's no longer in WIP, it's done, it's finished. So as you see here, the WIP is only there while we're processing something or producing something. Once we're done producing it, it's going to go right into finished goods, and we reduce it out of work in process. On January 31st, Wallace Manufacturing sells on account job 101. The job cost $39,000 and we sold it for $50,000. Entries to record the sale and recognize cost of goods sold are a debit to accounts receivable for $50, a credit to sales revenue for $50, and then we have to do the corresponding sale of the product. Cost of goods sold, $39. We reduce our finished goods inventory because it's no longer in finished goods. we sold it. So as you see here, this shows how we started all the costs. We purchased raw materials. We also had some factory labor. We incurred all these manufacturing overheads. When we needed raw materials, we requested them, a material requisition from the raw materials inventory. We put it into our work in process along with our factory labor. We calculated a predetermined manufacturing overhead based on hours of some kind or costs, and we put that estimated predetermined into our work in process. Once we finished it, we then took it out of work in process, put it over into finished goods, and then when we sold it, we took it out of finished goods and put it into cost of goods sold. This shows you the entire process from creating a product to finally selling it, and the process it goes through in the books, in the inventory accounts, to finally get it to the cost of goods sold, which happens in the income statement. Now, summary of the job order cost flows. We see our source documents, which is what we always need in order to record anything into our books. We have our material requisition slips, our time tickets, and our predetermined overhead rates all go into our cost, job order costs. So, while service companies don't necessarily have inventory, the techniques of job order costing are still useful. Mayo Clinic, Price Waterhouse, and Goldman Sachs, these companies need to track the cost of jobs performed for specific customers to evaluate the profitability of medical treatments, audits, or investment banking engagements. We still need to make sure we're charging enough. So even though the Mayo is a service, it still provides treatment. They still need to make sure they're charging enough for the equipment they're utilizing, the labor, and the products, the drugs, the chemo, whatever that may be. There are advantages of job order costing. We can generally assign costs to jobs. Think about your automobile. Well, a good example is our RV. We may choose to put in a satellite system into our RV. Is it fair that other people that don't have that satellite system get charged for it? No. So job order costing is beneficial when your products are all a little bit unique. The candy, you're processing Hershey bars. One Hershey bar should be the same as another Hershey bar, should be the same as another Hershey bar. That should be pretty straightforward. Plus, it makes sense to process batch them. But when we're dealing with automobiles or things that are unique in nature, the job order costing is the best way to go. Does that make sense? Provides useful information for determining profitability of various products. The bummer, it's time consuming, isn't it? Did you see all the work that needs to go into this? Requires a significant amount of data entry. Okay, so what I'd like to do, this is what I do want to talk about before we get on to exercise, that next exercise, because you won't understand what it means. We have this predetermined rate we're using. We're using this rate based on the best estimates we know how from prior years. But this rate is just an estimate. At the end of the period, we can determine if we overdid it or underdid it, the manufacturing overhead piece. So This objective is to distinguish between under or over applied manufacturing overhead. As you see here, we took our work in process, started at 0, we added our direct materials, direct labor, and we applied manufacturing overhead. So we put all that into work in process, less what's still work in process at the end of the period, we show as cost of goods manufactured. Now, the manufacturing overhead, instead of it being actual numbers like our materials and labor are, do you see how it's applied? It's a predetermined rate. Applied overhead gets added to our materials and labor so we can get instant numbers for our managers at the time. So as you see here, we show on an income statement our sales minus our cost of goods sold gives us a gross profit. So that's how our cost of goods sold flows over here. A debit balance in manufacturing overhead means that our overhead is underapplied. What that means, all of our actual costs get debited to manufacturing overhead. When we apply them to work in process, we credit our manufacturing overhead. If at the end of the period we have a debit balance sitting in here, that means we didn't put enough manufacturing overhead to various products. If we have a credit balance over here, that means we put too much manufacturing overhead applied into various products. So an under or over applied overhead, because think about it, we're doing the best we can to give results as soon as we can, and in doing so, we've got to come up with an estimate for manufacturing overhead. We don't know all the costs, but we're estimating them on the previous year. So if we have a debit balance left here, that means we didn't apply enough. If we have a credit balance in here, that means we applied too much. Any year-end balance in manufacturing overhead will get eliminated by adjusting the cost of goods sold. So if we underapplied overhead, which means we've got a debit balance sitting in our manufacturing overhead, what we're going to do is we'll credit our manufacturing overhead and we'll debit our cost of goods sold. You see that? Which increases our cost of goods sold. If we over-applied our overhead, then that means we show too much cost of goods sold. So in over-applying it, then we will credit our, when we have over-applied overhead, too much of it, we have too much cost of goods sold, therefore we'll credit our cost of goods sold to reduce what we really paid in cost to sell those goods. Here's an example. Wallace has a $2,500 credit balance in manufacturing overhead at December 31st. The adjusting entry for the over-applied overhead would be to debit manufacturing overhead, so we can zero it out, and then credit our cost of goods sold, which means what we showed as our cost of goods sold was greater than what it really should be. So let's go back to exercise 2.5, and we're going to go over this. 2.5. Eichert Company applies manufacturing overhead to jobs on the basis of machine hours. Overhead costs are expected to total $300,000 for the year, and machine usage is estimated at 125,000 hours. For the year, 322,000 of overhead costs are incurred and 100 30,000 hours are used. We have to compute the manufacturing overhead rate for the year. So let's do that first. How are we going to compute the overhead rate? Aren't we going to take expectations? We expect it to be 300,000 overhead, and we're going to apply it based on machine hours of 125,000 machine hours, right? So wouldn't we, in calculating our, let's do it this way. In doing this, won't we take 300,000 divided by 125,000 machine usage, right? Yes, no? So, manufacturing overhead, estimated manufacturing overhead, estimated machine hours. So we've got manufacturing overhead to be estimated at 300,000. And the machine hours, 125. What would be our predetermined rate? Would equal this divided by machine hours, or $2 per machine hour? No, I'm wrong. It should be 240. What am I doing? Oh, I don't have, sorry. 240, okay? So our predetermined overhead should be 240 per machine hour, right? Now it says, what is the amount of under or over applied overhead at December 31st? So we had 125,000 hours, okay? We apply it at 240 an hour, right? So we have put into manufacturing overhead, let's just kind of create a scenario here. So our manufacturing overhead here actually turned to be 322,000, okay? But what did we apply? We applied 130,000 hours, put it over here, 130,000 hours times 240 an hour, which turns out to be, what guys? $312,000? So if it truly is 322, that's actually what happened. But we applied 312. Did we over apply it or under apply it? Under applied, because we are sitting here now with a balance of, whoops. We're sitting here with a balance left over of 10,000, aren't we? So it says to us now, prepare the adjusting entry to assign the under or over applied overhead for the year to cost of goods sold. So if we have sitting here in manufacturing overhead a debit balance of 10,000, to zero this out, we're going to need to credit manufacturing overhead, a credit of 10,000, and our debit will be to cost of goods sold for 10,000. Does that make sense? Yes? No? What we're going to do, we'll continue to do problems, because I find that the more problems we do, the more it starts clicking and making sense. E6. A job cost sheet of Sandoval Company is given below. It gives us our direct materials, our direct labor, and our manufacturing overhead. What are the source documents for direct materials, direct labor, and manufacturing overhead costs assigned to this job? For the materials, what do we use? Material requisition slips. For the direct labor, what do we use? Time tickets. For the manufacturing overhead, what do we use? Perfect. Predetermined overhead rates. What is the predetermined manufacturing overhead rate? Do you see a correlation? It's applied against direct labor. How are we going to figure that out? Exactly. 550 divided by 440 gives us 1.25. 475 divided by 380 gives us 1.25. 675 divided by 340 gives us 1.25. Do you see how they have applied the predetermined overhead rate 125% of direct labor costs? You see that? What are the total cost and the unit cost of the completed job? So the total cost and the unit cost of the completed job. What are our direct materials at? $4,700. 7 plus 9 is 1,600, plus 1,600 is 32, plus 1,500, 47. What is our direct labor? 1,360, yep. And our manufacturing overhead? 1,150, 1,660? No, 1,700, I was wrong. 1,700. So if we take our direct materials, our direct labor, and our manufacturing overhead, 4,700, 1,360, and 1,700, our total cost is 7,760. How many units did we make? 2,500. So 7,760 divided by 2,500 is what? $3.10 a unit. Then it asks us, prepare the entry to record the completion of the job. So the job is now done. What will we do? We're going to take it out of work in process and we're going to put it into finished goods or finished goods inventory of 7,760. And we're going to credit with 7,760. Right? Does that make sense, guys? E27. Is this helpful to go over problems? Yes, no?
Yes.
E27. Crawford incurred the following transactions. And our job is, journalize these transactions, okay? So what I'm going to do is I'm going to pull up a sheet so you can see everything I'm doing here, okay? Okay? Purchased raw materials on account, 46.3. What's the first thing we're going to do, guys? Good. Debit raw materials inventory for 46.3. And what are we going to credit? Accounts payable, 46.3. Make sense? Number 2, raw materials of 36,000 were requisitioned to the factory. An analysis of the material requisition slips indicated that 6,800 was classified as indirect materials. So, what are we going to debit? 2 things, right? We're going to debit WIP, work in process inventory, of how much? 36 minus 6,800 is what? 29.2. 29.2 is going into work in process inventory. Manufacturing overhead is how much? 6,800. And what is our credit? Raw materials inventory of 36,000. Right? Does that make sense so far? Next. Factory labor costs incurred were 59,900, of which 51,000 pertained to factory wages. What are we going to do there? We're going to put in factory labor of how much? 59,900, right? And we've got factory wages payable of 51. And what's going to be the difference? Employer payroll taxes, or payroll taxes payable. Employer payroll taxes payable of the difference, which would be 8,900. Okay? Am I going too fast? Next, time tickets indicated that 54,000 was direct labor and 5,900 was indirect labor. What are we going to do there? We're going to show WIP of 54,000. We're going to show manufacturing overhead of 5,900. And what are we crediting here? Factory labor, okay, of 59,900. Make sense? Next, manufacturing overhead costs incurred on account were 80,500. So where does that go? Goes directly to manufacturing overhead, doesn't it? So we'll debit manufacturing overhead of 80,500, credit our payable Does that make sense?
We don't give any of that to the WIP just because it's overall overhead, right?
Correct. Remember, the only thing we give to WIP is the predetermined.
Okay.
So actual bills go right into manufacturing overhead.
Okay.
We are creating a predetermined amount, and then at the end of the period, we'll see an over or under applied and zero that out.
That's just because we know that number. We already know that it's 80,500.
We know this, but it takes forever to get that.
Okay.
Okay? So, our depreciation on the company's office building is $8,100. What is that going to be, guys? Is it factory?
No.
So it's not a product cost, it's a period cost, right? So aren't we going to show depreciation expense of $8,100? And we credit accumulated depreciation of $8,100? What if it was depreciation on the factory? Then we would put it into manufacturing overhead. Okay? Next, it says manufacturing overhead was applied at the rate of 150% of direct labor costs. So the direct labor costs was $54,000. See it up here? Direct labor, $54,000. So if the manufacturing overhead was applied at 150% of direct labor, we're going to go WIP, work in process, for how much? $54,000 times 150% is $81,000, and we credit manufacturing overhead, right, of 81, right? Number 8 says goods costing $88,000 were completed and transferred to finished goods. So we debit finished goods of $88,000. We credit WIP. Finished goods costing $75,000 to manufacture were sold on account for $103,000. What do? We debit cost of goods sold for $75,000. We credit finished goods. Then we have another entry, accounts receivable of $103,000. Credit sales, $103,000. Make sense? How are you guys doing? We've done a lot tonight. Is this overwhelming? Would you like to call it a night, or would you like me to continue doing some exercises? How about this? Those of you who are overwhelmed, feel free to leave. Those of you that want to hang around, I'm going to sit here until 9:30 anyway, just continuing to do exercises, and you can get it on your lecture. Yes?
Still recording.
So just so you know, at the end of each of these PowerPoints or throughout, I do this so you can get an understanding of what the quizzes are going to be like. It's going to be just like this. Which of the following would be accounted for using a job order cost system? The production of personal computers, the production of automobiles, the refining of petroleum, or the construction of a new campus building? What do you think? Yeah. The flow of costs in a job order cost system, A, involves accumulating manufacturing cost incurred and assigning the accumulated cost to work done, cannot be measured until all jobs are complete, measures product costs for a set time period, generally follows a LIFO cost flow assumption. A. Which of the following is not a control account? Oh, sorry, all of these are control accounts. Manufacturing, overhead, raw materials inventory, accounts receivable, they're all, that's B, raw materials inventory. They're all control accounts, okay? Under an effective system of internal control, the authorization for issuing materials is made, don't you dare say orally. I purposely was saying you need documents, remember me? On a pre-numbered material requisition slip. Got it? Not by the accounting department, not by anyone on the production line. We need to have controls in place, and we need to have documents in which we create journal entries. Which of the following shows entries only to control accounts? Now, factory labor payable, factory labor raw material. Which of these guys are control accounts? C, perfect. In calculating a predetermined overhead rate, a recent trend in automated manufacturing operations is to choose an activity base related to direct labor hours, indirect labor hours, machine hours. This is an automated manufacturing. Get it? Got it. Okay. So guys, you will get questions like that to help you prepare for what the quiz will be like.